I am not a SEBI registered analyst, and this content is for educational purposes only. If smart money quietly steps in, the charts start whispering before the headlines shout. Today, we're decoding a mystery banking giant that's showing both institutional interest cues and improving price structure, without naming it until the end, so watch till the reveal. Let's start with pure technicals. The stock has reclaimed momentum this year with the price trending above the 200-day moving average, and the 50-day sitting above the 200-day, what traders call a golden cross setup, signaling medium-term bullishness. Short-term, momentum eased a bit with RSI hovering in the mid-40s and stochastic readings cooling off, suggesting consolidation after a strong run rather than a breakdown. On many dashboards, the trend bias leans bullish on higher time frames, but daily indicators are mixed, healthy if the stock is building a base for the next leg. Key levels, supports can be seen near prior swing zones and moving averages, while resistance lies closer to recent highs where supply has emerged. Watch how the price behaves near those zones for confirmation on volume. Now, here's the institutional angle everyone's been asking about. While the BlackRock investment chatter has been loud, the most concrete recent institutional event tied to the group was the anchor book for the subsidiary's IPO, where global investors including BlackRock participated, indirectly spotlighting institutional confidence in the franchise ecosystem. The key is not to overinterpret one headline, instead, combine it with price and volume. If institutions are accumulating breakouts above resistance with strong volume and sustained closes above the 50 and 200-day averages often confirm it. On fundamentals, this bank remains a heavyweight. Full-year FY25 profit after tax climbed to roughly 67,000 crore rupees, consolidated, up about 10 to 11% YoY, maintaining double-digit growth through a tough cycle. Return on equity is in the mid-teens, consistent with high-quality private banks, with ROE trending around 13 to 14% post-merger normalization. Asset quality remains best in class with gross NPA around 1.3-1.4% and net NPA under 0.5% in recent quarters, pristine for a large lender. Net interest margin has compressed from pre-merger highs but remains stable in the low threes, reflecting deposit repricing and integration dynamics. Valuation sits near low 20s PE, reasonable for a franchise with scale, high CASA, and improving operating leverage, especially if earnings acceleration continues. In the latest quarter, revenue growth was double-digit coke, while PAT softened sequentially on higher provisions, typical for large banks managing. Technically, what's the setup? As long as price respects the 50 DMA and 200 DMA and any dips are bought back on volume, the uptrend bias stays intact. A decisive breakout above recent resistance with strong breadth would open the path to new highs. A breakdown below the 200 DMA on heavy volume would be an early caution signal for swing traders. Momentum traders can track RSI reclaiming 50 to 60 and MACD crossovers for timing entries. Position traders can lean on weekly structure and the 30 to 40 week average trend slope. Risk management. Avoid chasing extended candles into resistance. Stagger entries on pullbacks to the 2050's DMA and set stops just below swing lows. Catalysts to watch: sustained deposit growth, improving funding mix, NIM stabilization, provision normalization, and operating leverage from merger efficiencies. Another supportive angle is the broader group narrative. Recent strong YTD performance has re-rated sentiment towards the franchise after a muted post-merger phase. If credit cost remains under control and fee income scales, earnings compounding can support multiple expansion from the current zone. Alright, the reveal: the stock is HDFC Bank. The thesis blends improving technical structure, steady fundamentals, and institutional confidence signals linked to the broader franchise. For education only, build a plan, respect risk, and never over-leverage. If this breakdown helped, subscribe to the channel and press the bell icon for timely, research-packed videos that blend technicals and fundamentals. Weekly